Let's kick this off, guys. This is episode 2 of the broadcast. Bitcoin culture meets business and finance, and we catch up live on news, tweets, videos, charts, trends, and any other Bitcoin-related content that stood out to us in the past 2 weeks. Well, luckily for us, a lot of stuff has been going on in the past 2 weeks. So we all bring like 3-4 pieces of content that we found. And we have a little round in the beginning, kind of like a fire round, where we all share something that we found and have a quick comment on it. Then we'll have some topics that we dive deeper on, and at the end we'll see. We'll look at some things that we think are bullish or bearish, and then we're gonna wrap up. So let's get started with the first item, which is mine. And it is a segment from an interview with Treasury Secretary, U.S. Treasury Secretary Scott Bassent, and where he shares Bitcoin is becoming a store of value. It's actually really interesting. He gets asked a question about gold, and his answer starts with something about Bitcoin. Let's check it out for a second.
So it was unclear whether we were going to exempt gold from tariffs, which I believe we have. So there was a big move out of vaults in Switzerland, out of vaults in London to get it into New York. And look, that there are a lot of different stores of value over time. Bitcoin's becoming a store of value. Gold has historically been a store of value. I think what's interesting is, where do we see the gold demand coming from? A huge amount is from China.
Yes.
Where, as I said, they're in the middle of an economic recession/depression. People don't trust the Chinese currency because they have capital controls. There are...
Yeah, I'll keep it at this. But what I find so interesting is when you think about, this is the U.S. Treasury Secretary, and you don't see the question again. You don't see the question in the segment, but it was about gold. Why would he talk about something like Bitcoin if he doesn't understand it? I think, and this is probably a theme throughout this conversation, but how can you not be more bullish when this guy understands what Bitcoin is and specifically says it's becoming a store of value?
Yeah, it's crazy. That clip I don't think is getting enough attention. I've seen it make some rounds on Twitter the past week, but like, that is remarkable to me. I tweeted about it earlier this week. I wrote about it in the On-Ramp newsletter. Like, it is extremely constructive for the Treasury Secretary of the United States to just clearly understand Bitcoin and sound money and spontaneously bring it up when someone asks a question about gold. That is, I think, just a massive signal that we should be paying attention to.
Yeah, I think the most fascinating thing about all of this is that they projected all of this in Q3, Q4 as part of the campaign, like the tariffs, gold, Bitcoin, like the understanding of figuring out the strategic Bitcoin reserve. So it's been an interesting play that everything they said they were going to do has been done, including figure out the playbook with gold and Bitcoin and what that's going to look like.
Yeah. And even with them talking about it months ago, and still, I think there are many takes on this that still don't really grasp what they are doing. I think there is a plan, although it's a pretty wild plan and a pretty rough plan, right? Like as what we've been seeing the last week. But I do think there's a plan and a strategy. I mean, if you look at Bassent's past with the whole Soros attack on the Bank of England, where he actually placed the trades, I learned for that. So he is an expert around currency competition.
It's a good call, Bram. I don't think that's talked about enough. That what's happening is wild and it's looked at as either super risky or there's no plan. But the reality is, anyone that's been in a situation that has to do either something risky or high risk, ultimately, when you contextualize, it doesn't come in a vacuum. Like, we're in dire straits when it comes to a nation in debt, what's happening to manufacturing, all the things associated with having the reserve currency of the world, and then realizing that it's a national security issue that you don't actually produce anything in your country. And so they inherited this and they had to create a plan, which was formulated last year. And so sure, it probably is volatile and there's all these things, but in the context of where we were going, something had to be done. It's like high risk surgery. And you just have to do it. Now, I think there's probably a higher probability than people are giving that this actually has a landing that makes sense. But I think that's the context that we need to remember, is that we're in a bad spot.
Yeah, I think another addition to this, what we're talking about, is this video. I'll try to zoom in. Brian, maybe you can have a little voiceover here because you brought this one up.
Yeah, so very much related to the clip you shared, but this one is of Scott Bassent, an interview that he did before the election. I want to say it was like in July, and he's basically suggesting that he's historically been a gold bug from his days on Wall Street, and really a student of monetary theory more than anything. And so I think the quote, you don't have to play the video, but the important quote there was, in the next few years, we're going to have some kind of grand economic reordering, something equivalent to a new Bretton Woods. There's a very good chance that happens in the next 4 years, and I'd like to be a part of it. So that's just, I think this kind of got overlooked at the time. And so I saw it recirculating this week in the context of everything that's happening and some of his more recent interviews. But this is just a massive signal, a massive foreshadowing of what we're describing here in terms of, putting the tariff strategy aside, the specifics around that. It's like, this is a global economic and monetary reordering. So it definitionally will be volatile and appear chaotic on the surface, at least to some extent. But if you just think about what he said many months ago, and then you also compare that with the report I love going back to from 2022, Zoltan Pozsar, who at the time was at Credit Suisse, an economist for them, talked about this concept of Bretton Woods 3 and what that would look like, and really described this transition from inside monies, so anything that is sort of fiat currency based or fiat linked, and a transition towards outside money. And that would include gold, other precious metals. And the last line of that report, the guy Zoltan is not really a Bitcoin guy per se, but the last line of that report is, this is going to be a war that's going to be ugly. But if Bitcoin survives, if it still exists, it stands to benefit from all of this. And so I think this is just exactly what we're seeing play out. And I think it's just very telling that Bassent is clearly knowledgeable about sound money, the importance of it, and understands that, we're entering this period of pretty radical change. It's going to be volatile, but I think we come out on the other side much more appreciative of neutral hard assets as a country. And I think then that naturally spreads globally as people recognize that's where this is moving.
Yeah. I think there's a lot of historical precedent for what is happening now, and I think the inner workings or the real origins are difficult to eventually uncover. But I think the outcome, right, after, out of necessity, probably there's going to be multiple like trade accords, with the USA and some parts of the world, right? And I think that, like, once the dust settles, do you think that countries still want to trade in a currency or currencies that other countries control, right? That's kind of the main thing that I'm taking away from all of this, is the need for Bitcoin is going to be very real, I think, if despite accords, right? If you want to trade not in a currency that's controlled by someone else, what do you use, right? And I think we all know there's only one global decentralized final settlement asset that no one can really control, that people can actually use and countries can actually use to trade with each other. So I'm very interested to see where this chaos is going, but also, once the dust settles, like, what's the opportunity here for Bitcoin?
Yeah, I mean, this kind of ties into the post I'm going to do. So maybe, I don't know if you want to pull it up, and then
I'll pull it up here.
The transition. So, Brian outlined the Bretton Woods and this notion of 3.0. What does gold and Bitcoin look like? And I think there's something we've been talking about. I don't know if it was, I think Brom, it was a podcast we did, if it was either the last week or 2 weeks ago or one on on-ramp side, but it was the notion of Bitcoin is like the inverse of the traditional financial system, specifically bonds that are negative yielding, that people refuse to acknowledge it in the same way people refuse to acknowledge this asset that's been around for 15 years and has been the best performing asset. And part of that has to do with, I think a lot of this is top down. Like we've had people for hundreds of years talk about sound money and hold them. They were known as gold bugs. And governments have actually understood that, counterparty risk, you net settle in gold, but bonds, equity markets, a lot of reinvesting in the US, we've all just pretended like counterparty risk isn't a big deal. Nobody's called the bluffs. Nobody's called the capital home. And we're trying to figure out on these pods, and as we talk, well, when is the jig up? When do people start to wake up to Bitcoin as an example? And I think it's multifaceted. There's the notion of sovereigns realizing they want gold and Bitcoin, and then that's how people will adopt it if they're saying that's money. But then there's also the notion of just realizing, and this is a tweet from Peruvian Bull, the market is based on fundamentals and is tied directly to economic growth in an ironic way. It's in quotes because he shows that, 5 trillion in market cap increase. That's 20% of the US GDP. These are like based on tweets effectively, right? Like tweets and a couple it's tweets because it's not even enacted for a lot of the stuff. And you can see on this chart how the volatility continues to increase for the proxy of the amount of liquidity. It's just more liquidity has more volatility because it's a higher deleveraging component. That's all that's really happening. You inject more money, you inject more debt, unsoundness of capital allocation. And tying this all back it reminds me, you can see like this in isolated incidents. The one that comes to mind that isn't talked about enough is over Tether and Bitfinex's history. There's been times where Tether has depegged. It's been known in the industry that you just didn't have enough backing for a number of reasons. Back in 1819, the reserves were captured from New York, NYDFS, I guess. And point being, so they didn't have enough of the backing, but it kept the peg. And there was an understanding that if you have all these large exchanges and it's the net settlement layer, the second they allowed for it to depeg, well, you're going to have a deleveraging and people are going to flee, take the assets off. So it was just within the knowledge of like, look, let's let them get the solvency. It's best for the industry. And I think of that example of what happens on a grand economic scale where everyone's known stocks, bonds are overinflated. There's no way you can call on it, but everyone's played the game for a number of reasons. And ultimately part of this Bretton Woods and what Brian was referencing is this grand reordering of, hey, and this is why we saw all the gold get called back before they started to structure all this. Because think about it, if you're going to default on your credit card, you're going to try to take out as much money, buy as much shit and take it off. And then they're going to cut off your credit card. Now you don't have access to that like quote unquote money. And I think of that as a similar notion that's happening at the grand level. But then I think at the individual level, day after day, people are starting to realize, well, wait, is my stock and bond portfolio as sound as I thought it was? Is this how I should have all my money? Or is this actually just credit? And the only two things that are actually money is gold and Bitcoin.
Yeah, I love that. This is Bitcoin as a mirror, right? The fact that Bitcoin just exists, once you study it and understand its characteristics, and you also understand that it's not going away, you have to actually compare Bitcoin to all your other options. Right, and that is when this what you're talking about eventually will show. I think if you do enough due diligence on Bitcoin, so you're able to actually compare it to all these other options that you have.
Yeah, agreed. And the other just interesting note on all of that is like, I was thinking about this earlier this week. It's like the propensity to understand Bitcoin. Like we're actually in a very interesting time where it's like you kind of almost need all these other assets to be flailing for someone to open their eyes to it, like you're describing, Michael. Like if S&P and bonds were like doing great right now, there's just less incentive for someone to learn about Bitcoin. But if your entire portfolio, you're in a fucking 60-40 and it's just both sides of your 60-40 are getting hit, well then that prompts something in your mind and maybe makes you question your previous thoughts about Bitcoin and learn a little bit more. So I think right now is actually a very interesting time where, it's a unique scenario we don't see often in markets where both sides of the traditional 60-40 are getting hit. So that was, yeah. Yeah,
let's move on to our next segment where we go a bit deeper, I think this is Brian, something that you brought along, which was you comment on it.
Yeah, so this is a clip from earlier this week. A gentleman from S&P Global Ratings, and just want to play a part of this clip. If you want to,
I'll
send
play
it.
A number of years become true, but I would also highlight that then among crypto assets themselves, that there are significant differences. And when we're talking about that asset that may behave differently, that may be a hedge against currency debasement, for example, that may be uncorrelated to stocks, we're primarily focused on Bitcoin. We're focused on its characteristics as an alternate form of money. We're focused on the fact that it's decentralized, that it's geopolitically neutral, and we're starting to see adoption in that sense. So that narrative of investment appearing among institutional investors, among public sector investors, among national governments. But we are still very early in that trend. And so it's not very surprising that in an environment where investors are rapidly switching risk off in their portfolios, that we're seeing some correlation between crypto assets and other asset classes.
Yes, last year, of course, there was a lot of talk about Bitcoin.
But so yeah, I thought this was an amazing clip because, you know, it's not often that you see a sort of a non-crypto, so a non-native firm with, you know, over 100-year history who is really sharp on the distinction between Bitcoin and crypto. And so what he outlines in that clip is that, you know, S&P, which by the way is the world's largest credit ratings agency, so like, you know, this is a firm and also an industry that specializes in assessing risk. The fact that he is calling out how they view Bitcoin as significantly different than the rest of crypto, and also genuinely think it should be trading as a risk-off asset, but it gets lumped in with risk-on assets, I think is just a massive signal of, you know, we are still early in this education process, obviously, but there's signposts and signals like this that I think are really important to mention and call out, and just know that like this knowledge is permeating, that, you know, Bitcoin is not risky. It's not risk on. It's actually probably one of the more conservative risk off things you could own in a portfolio. And it's increasingly being viewed as such, being recognized for its, you know, credible neutrality, its decentralization, everything that he referenced there. And again, like this is a very traditional old school firm that specializes in assessing risk. And he is calling out specifically that Bitcoin should be viewed with a conservative lens, not necessarily a sort of risk on lens as it historically is. So I thought this was really amazing to see. I'd never heard of this guy, but shout out to, I think his name was Andrew O'Neill at S&P Global. Just a great clip there.
Yeah, we need to get him on the pod.
It's a good call.
I didn't hear that. And this is insanely exciting because think about 6 years ago, let alone 6 months ago, we would go into rooms on the on-ramp side and talk with pensions, endowments, and different firms. And they're at best, we're looking at digital assets. And they would tell you like, okay, well, that's interesting, but why do I need multi-institution custody? Like, why do I need any of this? I can just leave it on Coinbase, because they were looking at this asset in a bucket as risk assets. Everything was speculative. And you can start to see this notion permeate of all the things that he's talking about in neutrality, reserve status, the things that people have understood about Bitcoin and gold, is pretty wild from a mainstream perspective to hear. And you can see how just the price ticking up a little bit more in that narrative really starts to dislocate from crypto. But the other thing that just stood out from there is it's so like fascinating. It kind of ties to Brahms 2 weeks ago, where he, has a natural like rub against the dude that whatever he posted about like Bitcoin and it's a Ponzi and Satoshi. My version of that is the middle of the bell curve unoriginal thinker, because the unoriginal thinker will tell you that, well, what he just said is like not true, because it'd be priced in, like the price of Bitcoin would be 500K. And it's like the efficient market hypothesis is literally how people have missed everything in life, because they just believe that everything is known, because they can't come up with anything that the market would not know that would make them wealthy or come up with anything novel. And so that's where we're at in today's world. The people that can think independently and originally Or like, oh, maybe this is something that could be world changing. And then the other people are like, well, no, this would never work because if it did, it'd be $5 million.
Exactly.
So
like that's the point.
Yeah. No, I love touching upon this, right? We say a lot, Bitcoin is an asymmetric opportunity based on publicly available information, right? But you still have to do, take the action yourself. And I think what has helped me along the way is to, sometimes by accident, just make it more simplistic to figure out, is this a signal or not, right? So, okay, if this guy at a credit risk agency, talks about Bitcoin, and you think about the fact that Bitcoin is a random idea for better money, let loose on the internet 16 years ago, and it's still alive, and now this guy is talking about it, and even mentioning the characteristics that we think make it far superior to all other monies, that is the signal. Like, it doesn't get any more complicated than that, I would say. Maybe that is my left curve brain talking, right? But yeah, I mean, does it have to be more difficult than that?
We should put the Bitcoin like on a gold bar. There should be a product so you at least know it's physical. Maybe it'll help some of these people. Like if it's actually like you put like you get like what are the Cassatius coins, and then you put like whatever your allocation 10, and then you drop it right on Bitcoin, and you park it in a vault and say that Bitcoin's sitting in that vault.
Just really, really dumb it down for folks.
Yeah. All right. Let's move on to the next one. I think this is Michael's.
Yeah, so before the tweet, I think I had a few notes on this week, and this was just the past few days. The country of Pakistan brought on CZ, the CEO or former CEO of Binance, as an advisor. Vanek had reported that China and Russia had settling trade in Bitcoin, specifically, I believe, oil trade. And it's the notion that the treasuries and dollars are no longer risk-free, and this is a sovereign game theory playing out ultimately, that you're going to want to settle anything of value in a neutral currency that can't be either seized or debased. And so Hunter Horsley had a tweet that says, "Your nation that doesn't trust the U.S. right now, you're a nation that doesn't trust the U.S. right now. You want to store value in something other than the U.S. assets, but you don't want to own other nations' currencies, debts, assets because they're even weaker and you expect they'll debase it. So you could buy gold, but how do you get it shipped to you and in your possession? You look around and you see it, an asset that can't be debased is controlled by no country and that you can take into your possession immediately. You wind up buying Bitcoin. I think the one caveat to this is that people are going to go gold predominantly first and then Bitcoin. They'll come to Bitcoin when they receive the gold and 50% of it has tungsten wrapped in it. But it's the notion that they're effectively the same trade. Like Bitcoin's just gold with wings. So the notion of if you can take delivery of it, then you can transfer it and it can't be debased. It's just not an efficient way to do it, but it's still how trade settled. But it goes back just to the more macro theme of I'm just really excited about people realizing what is actually a value in money, and then what's the things like equities and bonds that are just fugazis at the end of the day.
Yeah. What I love is that, we all bring a piece of content. I have something later that ties into this as well, but I think we're kind of like seeing a common theme emerge, right? It's kind of, the what we just mentioned, the asymmetric opportunity, is also because people just follow a certain dogma, and now this new technology is introduced in the world, and some people, verifiable for anyone who wants to pay attention to it, right? Like that is also, I think, a very big point, right? The whole tungsten thing, like you don't have to trust a third party. That's part of the profoundness of Bitcoin, I think. But the fact that thing exists forces you to pay attention to it, if that is either your interest or your job. And I think the kind of like narrative that's emerging, although we are obviously in a bubble, is the questioning of this old paradigm. I think that's what shows in this tweet, and I think it ties into what I said before. Once the dust settles, what are you going to use? How are you going to trade in the digital age of humanity? Are you going to use a shiny rock or a digital technology that is establishing itself in the world, neutral, and all these things that we know are the characteristics. So I find it, that's what I take away from it. Like I see this narrative growing and growing, or at least the talk about it and the questioning of the old paradigm and the ways that people did it.
Yeah, I would agree with what Mike said as well in terms of I think it's gold and Bitcoin for a while. And I think the sort of transition in the process of people not only understanding what sound money is and looking for hard assets, looking for scarce assets, the transition to realizing that Bitcoin actually outcompetes gold in terms of its sort of objective monetary properties being dematerialized. And also, like, even just from a custodial perspective, like we talk a lot about this on the on-ramp side, it's like, there are a multitude of reasons why gold ultimately failed as money. But one of them was that the custody could become centralized over time. And so, we sort of joke internally, like, you can't multi-sig gold. And like, that is a fundamental, improvement on the custodial structure of this sound asset, in that you can distribute counterparty risk. And, oh, by the way, you always have the optionality to take possession of it, put it in your head, do all of those things that make it really special and make it, just superior to gold over the longer term. But I think that sort of interplay between gold and Bitcoin, Michael and I have been thinking about this a lot, but I do think it probably takes longer than people expect. I think, some people will try to say that there's going to be like this flipping moment where, gold just gets demonetized overnight. Like, I don't really see that happening, at least in the sort of near to medium term. Maybe at some point there's that kind of movement, but I think the first education is like, well, what the hell is money? To Mike, your earlier point of like, it's gold and Bitcoin and everything else is kind of basically credit. It's the same concept of inside versus outside money that I was referencing earlier. Mm-hmm. And then the second leg of that education is like, oh wait, Bitcoin is actually perfect money.
When you talk about the timeline, what are your thoughts? Like, how should people approach it? Because I think you mentioned earlier that, about the pricing in of understanding this, etc. But, again, it's an asymmetric opportunity. Not everyone understands this. There is a certain path, I think, that Bitcoin is following that, at least from my perspective, will end where we think it'll end in a positive way. But if people would judge it based on their own understanding in the now, and then think like, everyone else should have figured this out, but we're still at 82K. So is it really going to be as big as many people talk about? I think what would help for people is to zoom out and just like trust the diligence that you did. But I'm wondering what your thoughts are, and I'll share my thought, and that is, I hope I'll see it in my lifetime.
I think because we're younger, we will. We have a really fortunate position because when you're working all day in the space, you get a real taste for where people are at, and like from institutional perspective and regulatory policy. And this goes back to the original thinking, and what Brian was saying is, I've been thinking about this for probably 5 years about how like trade with mining equipment, everyone's known in the industry, it's kind of a black box. You send $5 million to China, you're hoping your miners show up based on reputations. That's how you got your miners. And that never really made sense to me, because you have Bitcoin, you have, multi-sig, you could provide like escrow services where each of the counterparties held a key, and then the intermediary could help and like facilitate that. And the logical transition from that in my mind was that's how net settlement of billions of dollars of oil tankers are going to happen between countries. You're going to have a consortium of keys, and you're going to be able to net settle. And because it makes zero sense if somebody has to send the Bitcoin or somebody has to send the tanker, right? And so why I'm bringing that up is because everyone's thinking and building in two-dimensional ways around this asset. They're still thinking about like, for hundreds and thousands of years, we've done exactly what we've done today with horses and gold for trade, in the same way somebody sends their dollars to Coinbase and then you buy it there. Like, it's the same thing, just in a digital fashion. And now you have this new asset. But from here where we're at to Bitcoin to be known as money, and then people to get burned with tungsten and then send the Bitcoin and realize multi-sig and realize this market structure and all the things that we're talking about, it feels at least 10 to 30 years away to really fully bake out, to the entrepreneurs that come in, the things to be understood, why you can trust an escrow because it's programmatic and it's not like a smart contract that can be hacked by Lazarus. Like, there's just all this stuff that has to be shaken out. But it's also bullish for everyone that listens specifically to your pod, because the demographic is generally younger individuals, and this is the most opportune time in my opinion to build, because if you build in the space, you can allocate more Bitcoin. Once you get tapped out of your fiat to buy, you can just build, and then you can just move your dividends into your personal portfolio. And so I get excited about like all the opportunity.
Yeah, love that. All right, let's move on to this one that I brought. I saw this from the brilliant Checkmate. He says almost, he has this chart. He says almost 100% of short-term holder supply is now underwater. I don't know at which price this was. I think, yeah, under 80, so 79. This was yesterday or a few days ago. So almost 100% of short-term holder supply is now underwater and holding losses. This represents over 25% of Bitcoin supply. We've now reached the lower bound of the 75K to 86K air pocket I started describing back in December. Wild times. And I just want to share this because, I think this is the phase where the real hodlers in this cycle, even if the cycles stay, right? This is where they are born. Like if you did the work, if you studied, like you're gonna hodl through this drawdown, and if you don't understand what you own, you will sell in this range, and then later when we go back up, we go into the 90s and up again, you will realize that you fumbled, but that's all part of the journey, right? I think we've all done that. I always share, like I bought between $100 and $300 and I sold everything at 4,000, and now I have less than before. I mean, that's part of it. But this post really stood out to me, showing that. And I think this is with each cycle we get to that point where the real hodlers are born. And yesterday I also saw another tweet of the hodl waves. I think it is 63% of Bitcoin have not moved in the past year. Okay, so these people went through the big drawdown and they're still holding. And when I see that percentage, 63%, all these people know what this is. All these people know what they own. So the amount of Bitcoin that other people can reasonably acquire is just getting less and less.
That's how Paul Tudor Jones came in post 2017 when the big crash happened. He had his analysts go look, and they came back and told him 80%. This thing crashed to 3,000, and 80% of the holders didn't sell. And he's like, "Wait, that makes 0 sense." And
it does make sense. Yeah,
yeah. But no, I think it's actually pretty bullish when you think about, yes, to your point, this is just a natural part of like holding anything. You have to have enough confidence and conviction that if it's volatile, it's okay to hold it. But also that, right now it's pumping a little bit. I think like I'll make a call that I think we're good. I think we're in the clear. Last night was a big move with gold, and then watch Bitcoin like kind of just move up with it really steadily. I think somebody's been, and Macroscope talks a lot about this on Twitter, is there's just been a steady bid. If there wasn't, we would see much deeper crash with this recent retrace. And, we're like, Bitcoin is on the mainstream now. It has been discussed with gold and on reserve currency status. And so now everyone's paying attention. And that's where the game theory comes in on the retracements, where people are stepping in when they can fill at their size. So it's super bullish that everyone's freaked out at $76,000 Bitcoin. After the whole world's on fire, by the way.
I think you make a very good point, right? The less drawdown we have, the more it signals that the people that are holding understand what this is,
And more people that are stepping in.
Or there's a bid. Yeah, exactly. I think that's
also
part of it too, is like, there's likely a large cohort of folks who like have been learning, have been educating themselves. And when they see that thing drop back to the 70s, they're like, all right, time to back up the truck here, because I think it's spot on. Like if you rewind a few years and you saw the S&P go down 15-20% in 3 sessions, like Bitcoin's down 40% at least. And so, over any time horizon, the past week, month, year to date, Bitcoin's still outperforming NASDAQ. It's still outperforming pretty much everything. It's probably pretty close with gold, I would imagine. But yeah, I think it's very well said, Brahm, around just like it is the journey. There's everybody's got to buy a top or think they bought a top, right? And you just hope you don't get shaken out. And so it is part of the journey, and I think that's generally though bullish. I think
one thing that I think would be helpful is I encourage anyone listening with friends and family that are very exposed to equities to either listen to this or just like hear or give them some of the concepts, because I had to do this with my mother-in-law, because you start to walk through the whole notion of, the overvalued aspect of it, the counterparty risk, how there's no fundamentals. And then to the point that Brian was making, and we showed the volatility. Once they hear that, it may take multiple touch points, but they see their portfolio get wiped away by 30% or whatever it looks like. And then you start to look at Bitcoin a lot more earnestly. And I think that's the most important part, is to contextualize that when everything's flying up and to the right, you feel rich, real estate, equities, bonds, you're good. But right now, again, the emperor has no clothes, and now people are going to be searching for a solution, and they're going to be ready to hear podcasts like this, or you pitch it that fourth time at dinner or whatever.
Yeah, which asset dropped the least? That's the one I want.
As our buddy Tim Kosman says, the lower the lower it dips, the higher it
harder it rips. Nice. All right. Well, thanks for sharing, guys. Let's move on to kind of like our last segment. It's a bit shorter. Is this bullish or not? I think everything we brought is bullish, but maybe that's also the theme here. Is how are we at time of recording? 83K with all the stuff that's going on, and I brought something that I saw. This is two tweets I'm going to show you. So Germany is considering withdrawing 124 billion worth of gold from the U.S. reserves after President Trump's tariffs. So where's the gold? Germany's conservatives sound the alarm over reserves in the U.S. I think in general the interesting conversation is the gold still there? But let's say still there, right? And you want to get this gold. I think someone else tweeted, no, they should just sell it, leave it in New York or whatever, and then just buy Bitcoin. And I also see here below this tweet that they need it after they sold all their Bitcoin at 40K, which is funny. But so then I thought, okay, what if you is this on the screen? Yeah. So if you want to get your sorry, I'm checking if it's on the screen. Yeah. How would that work? Moving $123 billion of an asset, right? And I was thinking, okay, is this maybe a use case for Bitcoin? So I went, I talked to Grok, and I asked it like, what would it cost to move, in this case, 1,200 tons of gold from New York to Frankfurt? That was the assumption, that it would go to Frankfurt, like what it would cost. Well, this was the conclusion of Grok. It said like it would cost 10.9 million, which, I mean, I don't know, but it sounds fairly conservative, to be honest. I don't know. That sounds cheap for that amount, but okay, let's go with 10.92 million. And like the estimated time, if it would be optimal, you see multiple planes to transport the gold in parallel, right? So yeah, I remember it was talking like, planes go back and forth, etc. So it optimized it. It says would take around 5 days. With everything, and then ocean freight would take longer. Anyway, so I was thinking, okay, 123 billion in Bitcoin would take 10 minutes. So that's 0.14% of the estimated physical move, which I think again is conservative, 5 days, but okay. It could cost $5, which is 0.000046%. Or maybe, $10,000, 0.09%, or even $100,000, 0.92%, just to be sure, right? Like, so when you push that transaction of all these billions, and you say, okay, I'm just going to put up a fee equivalent of $100,000 that would go through immediately. Yeah, I don't know. I was looking at this. I was like, yeah, this is incredibly bullish. Right, like if you just look at this and then tie it back to what we talked about, world trade settlement, the final settlement in world trade. Yeah, this I don't know. For me, this is the use case of Bitcoin and very bullish. And I wonder what you think, guys.
Yeah, this is awesome, and it ties to a report I think Van Eck put out earlier this week of China and Russia settling some energy trades in Bitcoin. It's super bullish in my mind, because it's this notion that I talk a lot about of, the proverbial digital gold thesis, viewing Bitcoin as a store of value, is really like leg one of the thesis. I think it's easiest for particularly people on the institutional side, to get their arms around like, okay, gold 2.0, that kind of makes sense. But taking it a step further is like thinking about the protocol itself, the network, the monetary rails, and how they are superior to existing fiat rails. And so that is, clearly what some other countries are waking up to. And then, Bram, I love this little calculation you've done because it really just demonstrates the realities of faster, cheaper settlement times, less dependencies, obviously. And just the advantages of having a dematerialized form of sound money.
Yeah, let's move on to the next one. I don't know who brought this. I think it was
Mike. Or this one might have been me. And we've talked about this a lot on the episode already. But yeah, gold is going absolutely vertical. I haven't looked at the price since we started recording, but I think there's to me, in my mind, this is wildly bullish because if more and more people are searching for sound money, outside money, the eventual, again, learning process is you figure out that Bitcoin is sound money perfected for the digital age. And so I kind of don't care how much lag there is between gold's price and Bitcoin. Like, I've got a pretty low time preference. And like, I'm not super concerned with like, well, gold's ripping, but Bitcoin's kind of, still in the 80s. Like, isn't that bearish? Because I've seen that take on Twitter of like, you just expect that these two, the market recognizes that these two things should trade similarly. It's like, well, no, not necessarily, because like that is the asymmetry of Bitcoin. Like that's why it's, fascinating at 83K or whatever we're at, is because most people don't recognize it for what it is as a risk off asset. And so if everyone realized that, we'd already be million plus a coin. And so it wouldn't be it would still be very asymmetric, but it wouldn't be as asymmetric as it is at 83K.
Mike, any thoughts?
It ties into, maybe we pull up mine, it'll tie into that because it's the same. So the tweet is only been one other Bitcoin setup like this. I don't know if you can click on the image, but it's effectively showing global liquidity cycles for the past 14 years. And you can see where liquidity starts to get sucked out of the system and Bitcoin's price retraces. It goes back to like mid 14, and then where 17 kicks off, and then Bitcoin's price rises. You can see it similarly in 22, and then ultimately it shows the amount of liquidity that's been injected the past, I would say like 60 plus days. And so, Brum, if you take that off, I want to pull this up because really quickly, it goes back to what you said on the bell curve of like, let's just keep it really simple. And this stuff is just a proxy for the amount of dollars created. Yeah. And so gold, Bitcoin.
What do you want to pull up? Do you have something to show, or send it in the chat here? Then
I don't know.
If you send it in the chat,
will that show up there? It didn't show up.
Yeah, wait.
Sorry. Yeah,
there it is.
So it's basically I was just messing around with some of the droid things last night, and they pulled up a chart on the M2 supply since 1970. And so at the end of the day, this is all it's about. It's just you put more liquidity in the system, and then hard assets or any asset that has any form of scarcity goes up. And then gold was the best asset for thousands of years. And then you just get scarcity perfected with Bitcoin. It's as simple as that. And you can't make any more of it. And so independent, like Brian referenced, gold's doing its thing because people are recognizing this. It's actually super bullish long term because it's understood. I believe somebody's dumping treasuries for gold, which is also like a speculative attack on, the US with the treasury yields going. But so, yeah, I think that ultimately we're set up for everyone's known, especially our good buddy, Larry Lepard, the big print is coming and it's actually probably already underway.
Well said.
You're on mute, bro.
I'm a noob. I said, all right, boys. Well, that concludes episode 2 of the broadcast. Every 2 weeks, we come back here, go live.
Did we have any guest submissions over the past 2 weeks?
Not yet, but I think we should use that in our next prep. Let's tweet about it and see if there are any suggestions also for the people listening or watching. If you find some interesting stuff that you like to hear us talk about, just to send it to any of us. Our handles are on the screen. And thanks again for chatting, guys.
tag the person. I was thinking during the pod who'd be fun to be on is Marty or Larry. Could be an interesting if they brought one or two things that they're watching. So we'll if you tag who you want, or we'll reach out and we'll spice this up. We got to get some takes that aren't as bullish.
We'll do that. We'll get some guests on, guys. Well, thank you so much, and
Thanks,
I hope the people enjoyed. Bye bye.
All right, have a good weekend.
Later.
Cheers.